And here's number 3, directly related to 1 and 2. But it's the word investor. The word investor. It is a beautiful word. It is a deep word. It is frequently misused in common parlance, at least by my way of thinking. Because in it, let's talk about the actual etymology of the word. So the word comes from the Latin investere. And I never did take Latin. I managed to avoid that throughout my schoolboy years, but I do respect it. And I do like etymologies, certainly as an English major and a reader and thinker. And the word meant to put on the clothes of. So that's what investere meant in ancient Rome. And that's where we derive our word investor. And I love that term because for me, it's like, well, a lot of us are going to watch the Super Bowl at the end of this week, and you're going to see a lot of people there wearing the shirt of the home team that they're cheering on in the Super Bowl. And that's how I think you and I should generally be about our investments. I think you're putting on the shirt, you're a fan. You're not about to flip the shirt, and if your team goes through a 5-game losing streak, or like we've seen in the stock market, I would say a really bad 5-week losing streak, you're not going to sell your team, sell your stocks, and you've kind of internalized your affection and interest and the spirit of the thing whose clothes you're wearing. And that's kind of what I think investing is about. And so it is by definition long-term. Therefore, anything that uses investor or investing in a way that is not truly long-term, which I would describe as 3 years plus, then I think it's a misuse of the word. And I think you and I should be a little hardcore on this with the media or with our friends and make it clear that what they just heard or said, invest or investor, if it wasn't, then I would say that's trading. That's a trader. In fact, to me, the opposite of the word investor is the word trader. Somebody who usually uses language like names and talks about momentum stocks and has essentially objectified the act of socking some of your own capital, hard-earned, hard-won, and becoming a part owner of a public corporation through the magic of the stock market and then letting that ride and trying to add to it over time. So that word investor, I find, is frequently misused, and I would encourage you and me to hold each other accountable and make sure that it's used properly. In fact, anytime you ever hear me say, I think I've said this before on our podcast, if you ever hear me say long-term investing or long-term investor, in my mind, that is a tautology. It is an unnecessary redundancy. By nature, investing and investor are long-term. Therefore, if you're near me, you may give me a dead arm if you hear me say long-term investing or long-term investor outside of the context I'm talking about right now. Because I don't think we should ever say that. I think that is what it is. And the more people who get that, the more people realize it's tautological, and I shouldn't even go there. And let me say one last thing about investor, and that is just that I think everyone is an investor. You are an investor, not just because you listen to Motley Fool podcasts or this podcast, or it's called Rule Breaker Investing. That's not why. It's because all of us, every time we spend $1 or €1 or a yuan, every one of us is making a choice with that money, and we're investing it. Now, it's not really long-term in this way, but what I really mean to say is whether you spend it on a stick of gum or that $1 to your 401k retirement plan, you made a choice about that money. It was self-directed. Everything in the end is self-directed, by the way. Even when you decide to check the box and give your money over to an index fund, that was a self-directed decision that you made. And I think the more people who realize this, they'll see that what's at the heart of the Motley Fool is, I think, the idea that you can do this. You can invest. And by the way, you should invest. In fact, I talked about this, I think, last week's podcast. My mental image is of the reverse debt clock example I gave, where your future net worth right now is ticking down, and you could watch it live if you're not invested. So for anybody that you know that is not invested, their future net worth is eroding as we speak because of the opportunity cost of waiting to get capital in the long-term beauty of the stock market.
As always, people on this program may have interest in the stocks they talk about. and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. Learn more about rule breaker investing at rbi.fool.com.